ERShares COO and Chief Investment Strategist. We will start off with Rivian. Those shares are surging higher today after the EV manufacturer announced a joint venture with Volkswagen in a deal worth nearly $6 billion. Eva, are you a buyer of Rivian?
We have this as a hold. There was, as you said, a great JV announcement today, but investors should not assume that this necessarily will go through. In the past few years, we had two major deals that did not go through. Ford backed out of a Rivian deal and Volkswagen backed out of a Ford deal. So in the auto market, it's very common to see that these deals do not go through at the end of the day. So the stock has been down 90% in the last 3 years, and the SG&A, the sales general and administrative costs, are now equal its gross margin. This is never a good sign. Also, the debt to equity ratio is above 100%. That's another bad sign. Although its revenue growth is 23% compared to 6% for the category, which is why we have it as a hold and not a sell. It's a difficult market, especially with Elon now well positioned in this Republican administration.
All right, let's move along to Kava. That's one we haven't talked about today, and it's making a huge move after its third quarter results. It's up 16% or so at last check. Keeps having the, well, is that the same Kava? Am I mistaken, Eva? Has it? Yeah, look at that. It's only up by 1% right now. What do you do here?
So Kava is a hold. It is a great entrepreneurial growth story. It's in the food market. They have great growth. It's up 220% year to date. That's amazing. And the total growth is now 43% compared to 20% for the rest of the category. And the growth per store is great, is now 18%, and that includes new customers as well as a greater expenditure per visit. So they're at the same time, though, the enterprise value to EBITDA is now 133 compared to 15 for the rest of the category. So it is well priced. It's actually the valuation is kind of stretched here, but the revenue growth is double the peers. So that's why we have it as a whole. There are some negatives, some positives. Again, this is a competitive market with very low barriers to entry. So I would have it as a hold.
All right, that's two holds so far. Finally, there's Applovin. That stock has been on an absolute tear this year, up over 600% since the start of 2024. It's one of the top holdings in your global growth fund. Eva, why do you like the stock, and are you buying more even at these levels?
I'm buying more, but I'm looking for great entry points. So our entrepreneur model identified this company in early 2023 as a company on the verge of a breakout. And that's when we got in. Since then, it's up 11 times, and it helped us reach 54% performance year to date for our ER30 TR index. Now, this is a company that has revenue growth, which is double its peers. And the most important statistic here is that their